before you take any trade. And if you are trading using the Malaysian SNR way, then you must understand these key levels and how they are formed in the market. Now, the first on the list is our support level. The first one is going to be our support. The first is support. Okay, let's look at them in this order. So the first of the major key levels we have here is the support. So the support levels, or what we refer to as the V level. Now, the support is usually formed when you have a bearish candle followed by a bullish candle. So that is a support. Support is formed like this. There is a bearish candle. There is a bear candle followed by a bullish candle. So in this case, here you have a support. Now, how do you mark it using the SNR way? You just take your horizontal line and place it at the closing of the bear candle. Yes. So this is your support. Now, in order for you to get that on you can turn to line chart. Yes, you see, line chart give us perfect shape for it. So when price, you see now, this is a V level. You can see it gives us shape V. Now from here, you expect that when price return to this level at some other time, there'll be a trade. Now that is how support is formed. Let's also look at more examples. Here is another support. Bear candle followed by a bullish candle. The same thing here. Bear candle followed by a bullish candle. So here you have another one. Bearish candle followed by a bullish candle. So this is what? This is support. That is how support is formed in the market. Now that is one of the major levels that we expect price to react from. Now the second point is resistance. The resistance, or what we refer to as A level. Now this is formed quite just opposite of the V level. Now in the case of this, you need a bull followed by a bearish candle. See that? Here is a bull candle followed by a bear candle. Now, the major concentration is going to be the closing of the bull candle, which is here. So this is where you are going to put your what? Your line. Then, yes, use also that line or you draw it. So this is going to be, yes, this is it. Now, if you want to get it clearly, you can switch to line chart, because on line chart it will be clear. You can see this is a what? This is a resistance. And the resistance has the shape of what? A level. Don't forget how a resistance is formed. You have a bull candle followed by two has to be present. The opposite candle has to be present. The same thing you have here too. So here you have what? You still have a bull candle followed by a bear candle. So here you have a resistance. The same thing is still here. Here is a resistance as well. You see it? Here is resistance. Here is resistance. You can see that here is a resistance. Price struggle around here to break out of this place. Now these are all resistance. Okay, here is resistance as well. Second, key levels we expect price to react from if you are trading using the Malaysian SNR way. Now the third point is SBR. SBR meaning support becomes resistance. SBR, support become resistance. So don't forget how support is formed. Support, it simply means when the support is broken, then that point becomes what? That same level becomes a point for resistance. Now let's look at example of that. Support that is broken. I want to look for here. Okay, here is a support level. This point is support. This particular point is support. Okay, let me use it. This is a support level. Here is a support. So this is a support. If I turn to line chart, you're going to see it. This is a V level. But what happens? You see, when price come to this place, price was able to break this level. So when the price broke this level, what happens? How did we know that this level has been broken? Yes, we know because there is a bearish candle that was able to close below this level. Yes, it closed with a body. It also closed with a body. It closed a body. So this place now become SBR. That is, support becomes resistance. It was formerly support. It becomes what? It becomes a resistance. So we expect now that when price come to this level, we see some level of what? Probably rejection, and price is able to what? Price is able to go down. Now this is support becomes resistance. So this is SBR. So if you look at it, now we're going to see the shape is going to give us. So look at the shape. V level got broken, and of course the last level we are going to get into that now. So we have this support becomes resistance. Formerly support got broken, then this level we expect price to resist this level. Yeah, okay, so this is support becomes resistance. Now the fourth one is resistance becomes support. Resistance becomes support. Now, let's look at the example of resistance we have. Now, here is one. Yes, here is one. Don't forget how resistance is formed when there is a bull candle followed by a bear candle. Yes, you have it here. You also have it here. You have it here. Now, but look at what happened. When price came, price broke this resistance. So automatically this level here becomes what? Become RBS. RBS. So that is resistance becomes support. It was formerly a resistance. Price was able to break, close above it, and it becomes what? A new support. You can see what price actually did when price came back to that level. Price was able to find support here. Price was not able to break this level again. Price was able to find some sort of support here, and price was able to move up from there. So this place also, this also become RBS. Former resistance is being the same thing we have here. Here is a resistance. Don't forget, resistance is bullish candle followed by bear candle. Price close above it, then the level becomes what? Level become RBS. Yes, resistance becomes support. So we have it everywhere. You go everywhere. This is H1, H4, daily. You have all of this now, and this is, yeah, so this is RBS. Now let's also look at, yes, we have gap level, key levels that we wait for price to also react from. Now, if you look at here, when you have two candles, the opening between two candles of the same color is what we call gap level, this level. Price can react here and continue to go up. Look at this typical example. Look at what price did. This is a gap level, or some people refer to it gap level. Some people refer to it as open and close. Yes. Some people also refer to it as open close, open and close, or open close. Now, don't forget that in some of the videos in the channel, I've discussed that there are a lot of hidden things in the gap levels. So you can see the videos, some of the videos there in the channel, you see them in the playlist. Now, you see, when price reacted from here, price couldn't close below this level again. Price was able to zoom up from here. So this is open and close. So the same in bear candle, bullish candle, you also have it. This is it. This is open and close. Open and close. This is open and close level. See it? Open and close. This is also one of the major key levels that price can react from. You know, one of the things that every trader should know is that the best way to trade is to react and not predict the market. Yes. And I personally have seen significant, I must say, I become profitable when I understand the concept of reacting instead of predicting what the market is going to do. Because over time, I'm marking the next thing to talk about. Here, we also have what? We have gap levels. Yeah, gap levels, they are everywhere. Okay, look at this particular point. See, price had a lot of struggles. After price got to this particular level, price had a lot of struggles, about 1, 2, 3, 4 candles before the 5th candle was able to break that level. And look at this particular level here, this open and close level also. It's also fortunate to line up with RBS. This is a resistance that turned to support, and they line up with gap level, and price was able to react from here, and price just went up like that. Now, the last level that is of importance that price usually react from, that you can also take trade from, is the QM level. Now, pay attention. Okay, I want to look for typical. Okay, here you have a support. Here you have a resistance. Here's a resistance that got broken. Price came down and price turned to this level. Okay, let's turn to line chart. Yes, this is high, low, higher high, lower low. Price returned to this level. So this is a QM. And you see what price did exactly when price returned to this level. So line chart is one of the things that will help you in getting your QM. There's a video dedicated in the channel for QM. So this is another QM. So if I turn to line charts, you can see this is a QM. This is high, low, higher high, lower low. Price return to this level. If I turn to line chart, you're going to see it. You see, price return to this level. Now, I can spot it quickly because I'm used to it. Then look at this. So let's turn to line chart. See it? High, low, higher high, lower low. Price return to that level. So that is QM. That is QM. QM is one of the strongest reversal pattern. Here is another one. Let's turn to line chart. You're going to see it. See it? High, low, higher high, lower low. Price return to that level. So we have them everywhere. This is another QM. Another QM. Now, the fact that these levels are present does not mean when price return to those levels, we just start opening trade. No. We only know that these are the levels frame from H4, daily and weekly. So when price return to those levels, we look at how price react from those levels, and we'll go to the lower time frame to enter our trade. So, okay, and get a good trade out of it, because these levels are present. Okay, this is H4, this is daily, this is daily. So what did I see? QM is present here. This is QM level. Let me turn to line chart. You're going to see, you see it. Low, higher high, lower low, and price return to that level. You see it, price return to this level, and it was a sell. QM. Now this level also will be a QM level. This level will be a QM. Why do I know that? You can see this candles. If I go on lower time frame, you see. Yes, you see, this is a QM level. It's a QM level. Yeah. And price eventually return to that level at this point. So this is a QM level. So you can spot QM level irrespective of, now look at this. Yes, you see it, high, low, high, lower, low, and price return to this level. So these are the key levels you want price to react from before you take your trade. Yes, these and many more are what is being taught in the mentorship. So, and the mentorship is still open. If you want to be part of it and you want to get a sniper trade, how we trade, how we're able to take trade effortlessly, just relying on what price is doing. We are not here to predict the market. We just wait and see how price react to any of these levels, and we look for our entry model if it is present. If our entry model is present, we just take the trade without hesitating. Welcome back to class, and today what we'll be discussing your key levels. What are the major levels you consider price reacting from before you take any trade? And if you are trading using the Malaysian MSNR way, then you must understand these key levels and how they are forming the market. Now, the first on the list is our support level. The first one is going to be our support. The first is support. Okay, let's look at them in this order. So the first of the major key levels we have here is the support. So the support levels, or what we refer to as the V level. Now, the support is usually formed when you have a bearish candle followed by a bullish candle. So that is a support. Support is formed like this. There is a bearish candle followed by a bullish candle. So in this case, here you have a support. Now, how do you mark it using the MSNR way? You just take your horizontal line and place it at the closing of the bear candle. Yes. So this is your support. Now, in order for you to get that on